Ray Dalio has warned you, Robert Kiyosaki has warned you, and the billionaires are showing you. They're showing you exactly what they're doing. On this channel, I share with you exactly how I've built an ecosystem and helped transition my family's wealth into assets that I believe are going to survive this biggest transition in wealth in history. So today we're going to look at some facts, figures, numbers, logic, and we're going to methodically look at what the elites are doing. But Ray Dalio has told you that cash is trash. Robert Kiyosaki has warned you for a long time that the fiat system is dying. But here's some facts. The US dollar is dead. That's all it is. Since 1971, they detached us from the gold standard, making our money completely fake, and they could just print as much money as they want. And now, as you stand here in 2025, we have over 120% debt to income ratio. Warren Buffett, stock indicator, the stocks are overvalued dramatically, which I'll show you on tomorrow's video. We're sitting right now in a system that 30% of our debt is held outside the United States by Japan and China. Think about that. We have to borrow to pay for critical services. And now all of a sudden, we have a Genius Act, Genius, a stablecoin act that uses bonds, short-term bonds to balance out the market. We have a Bitcoin strategic reserve, and Bitcoin's going to be mined for another 116 years. And they told you to look this way. They told you to stay as far away as you could from Bitcoin. Everybody told you that XRP was going to zero. And now, as we sit today, we have a Bitcoin strategic reserve, and I'm going to show you how some of the biggest companies in the world, to include Grayscale, are playing in XRP. So I'm going to share with you on this channel exactly what I'm doing. On the back end, I share with you exactly my ecosystem. My number one goal is to be non-emotional. The red markets is where I celebrate. Today, the markets are red. I'm buying more. There's zero emotion. When the markets are green, as we go into November, December, I'm selling profits. I don't just sit in markets and watch them go up and down. I secure my ecosystem. I secure my family's money. I create leverage, and I continue to buy when it's red, when it's on sale, to sell when it's green. So let's dive right in. So first, we're going to look at Ray Dalio. We're going to take a look at what he's been saying for a very, very long time. We're going to watch an older video of Ray Dalio, where he talks about what he's doing in cryptocurrency. Now, remember, Ray Dalio was like, to crypto. And then he retired from Bridgewater, which is a $1 billion investment firm. Now he's like, maybe 2, 3, 5% into Bitcoin. But why are they heading into Bitcoin? That's the most important part. It's not that you need to buy Bitcoin. It's not that you need to buy XRP. You need to understand that it's almost impossible to beat inflation in the US dollar. Okay. So Ray Dalio said this recently. He said, Ray Dalio says gold and non-fiat currencies will strengthen US debt as US debt surges. So here's what's going to happen. The US debt is going to go much higher. Okay. They're going to print more money than in history with the bigger, better bill, right? They're going to monetize more debt with lower interest rates. That makes your dollar worth less. Okay, so this was 3 years ago when Ray Dalio, remember, I told you guys in 2023, something flipped. Ray Dalio flipped, Trump flipped, Larry Fink flipped. Now, since then, Larry Fink, number 2 holder, BlackRock in Bitcoin in the world, okay? Ray Dalio started getting access to Bitcoin. Trump said about 3 years ago he started investing, and now the Trump media is the 8th largest holder in the Bitcoin treasury. Trump created a Bitcoin strategic reserve. The Trump family has their own DeFi platform. Okay. It's not going anywhere, guys. You have to be able to understand how to ride these waves. Okay. So this was 3 years ago. And then we're going to watch some other videos, really positioning where we're at and where I think we're going.
Before we let you go about crypto, you told CoinDesk you own some, even though you said you thought it was going to get killed by regulation. How much Bitcoin do you own? Do you have any other cryptocurrencies? And what do you think the outlook is for them now?
Well, I'm not going to give the precise amount of Bitcoin, and that I do own some Ethereum as well. But the answer to your question is that I don't own a lot of it. I view it as an alternative money in a environment where the value of cash money is depreciating in real terms. And I think it's very impressive that for last 10, 11 years, that programming has still held up. It hasn't been hacked and so on, and it has an adoption rate. So I'm very big on diversification.
Me too.
And it's a relatively small part of the portfolio. I would like to say that cash, I've been quoted, cash is trash, that cash, which most investors think is the safest investment, is, I think, the worst investment.
Okay. And I agree 1000%. That's how I built my whole model. Cash is trash. I use cash to transmute it into insurance, which is protected. I can leverage assets that have a fixed supply that beat inflation. It's that simple. There's no emotion. You can use gold, you can use silver. Cash is trash, guys. It's debt. You're getting paid in someone else's debt. Okay, so let's continue on. Just in, Bitcoin has become the reserve asset of the internet. Money Week. Bitcoin has become, I'm reading it again. Bitcoin has become the reserve asset of the internet. The cryptocurrency has established itself as the electronic version of gold. And I 1000 believe in that. And I stand on that. I'm using it as gold. I'm using it as a family bank. Okay, I've already told you guys, and I'll share with you on the back end of the video on how I used it to buy a cash generating business. Okay, so CoinDesk new Grayscale has launched the CoinDesk Crypto 5 ETF, GDLC, giving investors exposure to 90% of the crypto market through Bitcoin, Ethereum, Solana, XRP, and Cardano. My top three are XRP, Bitcoin, and Solana. That is the main foundation of my portfolio. I am not trying to get rich quick. I'm building a monster portfolio, and I'm feeding those three buckets. I'm consolidating into those three. I'm also adding WLFI. So I'll share with you on the back end my top six. Okay, so that is my foundation as well as I continue to consolidate in cryptocurrency. Okay. I have 10% in cash generating dividends. Okay. That's a higher risk portfolio. I'm using options, synthetic option calls that are generating a large amount of income per month. I'm de-risking back into Bitcoin and XRP. Okay. Fixed supply assets. And then on the insurance side, I'm stacking my cash value during the bull market. And then I'm leveraging to buy more Bitcoin, XRP, and Solana. Okay. Very simple. Just a simple strategy. Okay. This is it right here. This is a Grayscale GDLC. So anybody who is, I mean, think about it. If you're around people who are like cryptocurrencies, I mean, it's over, guys. The narrative of cryptocurrency is a fraud. Grayscale, one of the largest, and they're the third. So you got Satoshi, #1 holder in Bitcoin, BlackRock, #2, Strategy B, Grayscale in America. So, I mean, you could listen to your drunk uncle at the barbecue, or you can look to see what the largest companies in the world are actually doing. Okay, so I'm going to leave you guys with this, and then I'm going to go into exactly what I do. Anthony Pompliano, this is really, really an interesting perspective that this guy, I want to apologize. I don't know what this guy's name is. It was at he was interviewing this gentleman, so I do apologize. I don't know who this guy is. But sorry, you guys can't even see that. Give me 1 second. Boom, boom, boom. Let's do a little adjusting here. Stand by. Camera 1, camera 2. Just kidding. There we go. Okay, so let's watch this guy right here. Very interesting perspective.
Take a moment to think about this one simple fact that everything we know about modern quantitative finance is all built upon the fundamental principles of physics based on this one particular security for which we know the relationship of mu to its sigma, which is the riskless bond, has a sigma of 0 and has a guaranteed return of R. Everything we know about modern finance is built off of the T-bill.
This is so important, guys. This is what you just really listen to. I would go watch this whole interview. Everything you know is based on the T-bill, okay? Treasury bonds, stablecoin, buying treasury bonds. There's a rewiring of the monetary system. Just really listen to what he says. It's really important.
And the risk-free rate. If you fundamentally challenge that, that is the equivalent atomic bomb of modern finance. And I think that's why people are talking about Bitcoin. Mm-hmm. That's why people are talking about how global macro in the context of AI is changing a lot of the ways we think about acceleration and technology. And all of this means we have to think differently about where is value. How are we going to invest in the future that's going to prove ourselves
You have to think differently. That's all I'm challenging you to do. I'm thinking differently, and it's increased our wealth dramatically over the past 5 years. Okay, it's because we're indoctrinated. You have to start to just think differently. That's all I'm challenging you to do.
For the forward and not just thinking about the past.
As part of this ideological investor, you've come up with this term, radical portfolio theory, which modern portfolio theory is not very radical. So what is the difference between modern portfolio theory and radical portfolio theory?
Yeah, absolutely. You know, funny story here is I was thinking about how to even bring this concept in a way that people would have it register in their brain and think about it inaccessibly. And I chose the word radical. And I chose it because it's a little bit provocative, right? But the thing that maybe many of you might not know in this room is radical, the word, is actually founded upon the Latin word where it is actually to go back to the root. It's off of radix. So to be radical, it means to going back to the root of solving its problems. So actually, when we talk about radicalization happening, the notion of this means returning to fundamental principles and trying to understand what anything we've ever known might have to be fundamentally challenged. And so that's why it's the radical portfolio theory. And so what is it? 60-40 is clearly dead, right?
So important. 60-40 is clearly dead. That's the thing you've been told. 60-40, 60-40, your investment. And if that doesn't make sense, go look up 60-40. That's a traditional investment.
Know this from all the other speakers we've heard from today. And for many of the reasons for it's dead is because there's been so much liquidity that's been manufactured in an abundant fashion for which price is no longer reflecting a healthy discovery of market forces. When you see index flows that are overwhelming all kinds of idiosyncratic dispersion in long-short stock investing, or bonds that are moving because sovereign actors like Japan is inundating the market and the bond auctions are breaking, all of these things point to a world where it's not on the risk on and risk off framework of bonds and equities offering certain uncorrelated benefits. They're actually all correlated. It's one of one. And so you have to step outside the box and consider what is actually not part of the paradigm of investing today that we can consider truly radical. And so the way I think about it is that there are what I call compliance assets, and there are some that I call resistance assets. Everything we know is generally in compliance assets, bonds, equities, private equity, venture capital, all these form factors we're familiar with. It's all affected by generally macro and sovereign flows and the way institutions operate. That's 60% of compliance assets we should all have. But there are certain assets that none of these folks touch, right? Bitcoin is one kind of example of it. Gold is another example of it that behaves differently. But there's a slew of other things that I think we are now seeing where we're going to find value in scarce assets. Right? These are fundamentally not manufacturable by an institution to provide abundant liquidity that creates hyperfinancialization of markets. These store value because by definition, they're scarce. And I think there is a whole world of these assets that are going to come online, and people already know about it actually at some level if you're an ultra high net worth, which is why things like yachts are valuable, things like land is valuable, things like Hermes Birkin bags are valuable. I mean, things like Rolex watches, all these things are in the scarce category that's not financialized, but they hold value. And my hope is that more people, and retail investors included, start thinking about building a portfolio in that holistic fashion where it's not just what the textbook tells you about, compliance assets, but
okay. So that's how I built my portfolio. I could not. So his name is Jeff Park. He's a CIO. Let me give you his name. So I want to give him respect. It is Jeff Park, CIO of Pro Capital BTC. Okay. Now, of course, he's biased. He's a part of a BTC company, but I came from the traditional banking system. I've created a very untraditional portfolio. Now, it's worked very well for me. I'm not saying this is what you have to do. I'm just explaining to you what I have done. And I've done this through educating myself. Number one, on macro and microeconomics cycles. I am completely non-emotional about the markets. Today is red. I'm like, oh, awesome. Fantastic. I'm a Warren Buffett style investor. So here's how my portfolio is set up. And I'm just going to be very transparent with you guys. 60% of my portfolio is in cryptocurrency. Okay. People think I'm absolutely crazy. It's worked really, really well for me. But here's why. I have a system, an ecosystem. Okay. This thing has generated a lot of percentage, and I'll explain that in just a moment. Okay. I have 10% in cash generating dividends that pay me a large amount. It's the highest risk part of my portfolio. Okay. Then I have 30% of my wealth is insured in cash value life insurance. Okay. So I have this legacy part building over here. I built a framework. Okay. It's cash, appreciating assets, leverage protection. I call it CALP. Okay. Then I have a DR strategy, de-risking strategy. It's my own strategy I've created. CALP. Write that down. Cash flow. Cash is trash. Appreciating assets. My cash flow goes into that have fixed supply, as he talks about. Okay. When these fixed supply assets profit, I am non-emotional. I do not watch them go up and come collapsing back down. I'm not waiting for a savior. My money is currency. It moves. When I profit, I pull profits from the appreciating assets because it doesn't. Why do you think Warren Buffett's in cash right now, guys? Think about that. He doesn't just sit there and watch a market go up and down. He pulled out a bunch of Apple. He pulled out of Bank of America. What was that before the big bank collapse, right? He's not married to these assets. If he was in XRP and Bitcoin, he would be married to these. Now, Bitcoin is off to the side like gold, okay? But all my other cryptos, I sell 50% in the bull market. I can't wait for November, December. I pull profits. And what do? I max fund my insurance policy. So that's the traditional part of my portfolio. So as everybody comes collapsing down the markets, my money is insured. My actual principal is insured. So I take profits and I insure my profit. So when you watch the market go up and come collapsing back down in 2022, I have insured money. But then I created a fourth component, which is leverage. It's CALP, my CALP, and then my DR, de-risk. Okay. Then I have leverage. I have Bitcoin leverage, asset, and I have insurance leverage. So when the markets come collapsing down, it's red, I multiply my money. So $1 becomes multiple dollars. Okay. So when you're just sitting there and cashing out and then buying back in, I'm cashing out, funding, borrowing, and then buying. I turned $1 into 3. That's richest man in Babylon. Okay. So where's cash flow coming? So when I profit here or my businesses continue to grow, I keep my expenses lean and mean. I have the same bills as I did since 2021. And though my wealth has increased, I just stayed lean and mean. I kept my expenses very low and I'm keep increasing my investable income. Okay. So I buy cash generating dividends. So now I have cash flow from businesses, cash generating dividends. My dividends are high risk, high return. So what I do is I de-risk. And guess what I buy? Bitcoin and XRP. Now, I believe in Bitcoin and XRP like convicted. So that's my point behind this is if you're not convicted and you can't explain it to a 10-year-old. For example, this is how I explained XRP to my son. Let me give you an example. This is what I mean by this, okay? I said to him, okay, if I had 1,000 penguins on this side on an iceberg and they're on their belly and they need to get over to this iceberg over here, okay? If the ice in the middle that they went across, there's like a little bridge, was really, really thin, how many penguins could I get across? He said, well, if it was thin and, there's going to be heat when they go across, only a couple because the ice would melt. That's very good. I said, so what would need to happen in order for all the penguins to get to the other side? He said, well, the ice in the middle would have to be really, 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 really big because it would burn every single time. Like, that's XRP. That's it. There's no emotion. That's what they created. They created one of the greatest technological advancements in financial history that literally solves the nostro vostro liquidity crisis. I understand that. I came from banking. I'm like, damn, that's awesome. I feel like I own one of the most valuable assets in the world, but I'm not married to it. Okay. Now, I'm not saying you have to do this. I'm holding 50% of altcoins. Okay. Bitcoin we're never selling. I'm going to exit on the way up. I already exited when Trump got elected. It shot past my first target of $2.70. I pulled profits and I filled my ecosystem. Now on the back end of this year, it's going to go up. I'm holding 50% for legacy and I'm pulling on the way up. That's what I do. That doesn't mean you have to do that. And I think there's, we help a lot of different people in financial literacy and education and ecosystem, but it's like you have to decide what feels good for you. This is about sovereignty of your wealth. And if it feels good just to hold and borrow against your asset, that's fine. But for me, I'm looking for legacy. I'm looking for, if you study Richest Man in Babylon, if you study Wisdom of King Solomon, none of them are in one asset class. That makes 0 sense. That makes 0 sense. Okay. Because remember, wherever you're storing your money, if it's not DeFi, if it's not decentralized, they're using your money. That's how it works. It's not a nonprofit organization. So I put myself in first position. Okay. I use a bank to pay our team members. We have 6 companies. We have team members, we have payroll. But anytime I get paid or our company gets paid, we have the same ecosystem built for our company. So every week, our company, just like I do, we take cash flow. We take 20% of we have a 20% profit margin. We take 20%. We invest in Bitcoin, XRP, Solana, other assets. We invest in cash generating dividends. We take the cash generating dividends, we de-risk back in. And what we're doing is working to create the enterprise value, working to create a big treasury for our company. So it's just about ecosystems. Does that make sense? Hopefully that makes sense. And I'm non-emotional. When I woke up this morning, saw the market's red, I'm like, yes, thank you. Thank you, God. I'm going to buy some more. But if you're constantly like, oh my gosh, I can't, my life will change when XRP goes to 2000, nothing's going to change, guys. You'll have a temporary relief and a temporary dopamine, and you're going to go broke really, really quick. Just look at the market. Look at some of the influencers that made a shitload of money in the bull market last year or last bull run, and they're fighting and selling you tokens and doing all that. That's just how the market works, guys. Ecosystems, discipline, consistency, feeding it, and touching some grass, man. Relax. You don't want stuff quickly. You want to be disciplined, consistent for a long enough period of time to access that new paradigm. That's how legacy is built. That's why you see me post the same things every single day and repeat the same thing every single day until something changes. I'm not worried about the person that comments down below and says you're saying the same thing. That's the people I know are going to get wrecked. Because when you understand discipline, consistency, you will see wisdom in that. But if someone's changing their narrative every 15 minutes and that next hot thing they're trying to sell to you or bring up, that's dangerous, man. That's very, very dangerous. That means you're the exit liquidity. So I love you guys. I appreciate you. I want to show you guys this. This is very, very important. Is this showing up? What is going on here? There we go. Boom. Okay, so this is Merlin, smartest way to track your crypto. This is my company. I'm the co-founder and creator. Here is how I set up exit targets. So we used to carry around spreadsheets, and so we are problem solvers. This is one of the companies we created. We own a company called Blockheads, a software company. We built this with 38,000 lines of code. It is one of the greatest crypto trackers in human history. It is growing very fast. Not only do we create a interface that this is beautiful, because when I travel, I never use my exchanges. I only use Merlin because nobody can hack my crypto. So I can be at Starbucks looking at Merlin, and if somebody gets a hold of my Merlin account, it's just an interface. It's just showing data. That's it. So nobody can transfer money. That we don't buy and sell crypto. This is an interface. You see how you have all your cryptos here? Okay, you got all your exchanges in one place. It organizes your portfolio. Look at this. It shows you this is our demo account. So like this demo account has 41% XRP, 37% Bitcoin. Okay. It actually kind of models my accept ADA. This kind of models my flow here. So I'm one highest XRP by a long shot. BTC, my third is Solana. And then you go over here, you see the market's at a snapshot. So you don't need to go anywhere else. Like, so you just stay calm. Boom. Bitcoin's at 113. Bitcoin dominance at 57. If the ETH is at 4,200. Oh, guys, this is all. We're getting set up for a big back end of the year, baby. Hold tight. Don't panic. Get started here. Okay, look at all the different exchanges you can link up here. We have military grade security, and again, your crypto is not attached to this. We have a video and shows you how to set up exit targets, and if you get stuck, boom, you go here. And we have the best customer service. We actually physically get on the phone with you and we will help you out. So Merlin is truly the smartest way to track your crypto, the smartest way to keep your crypto safe. It's not storage. Remember, it's just an interface. Does that make sense? So you're not trading on here. So then we send you an alert when you get close to your exit target, and then you calmly exit the market. That's what you do. You go to your Coinbase, your Kraken, and then you do your exits. Okay. So we send you an alert that you're getting close. Hey, you're 10%. That way you can sit with your family, have dinner, be present. I was out on the lake yesterday and just chilling, and Merlin sent me. It's like, hey, markets are collapsing. I'm like, cool, thanks, Merlin. Just kidding. I love you guys. I really do. So go to my bio, click the link. Just try it for 30 days. You'll absolutely love it. I warn you, you're going to love it. You're going to keep it, but you can try it for free for 30 days. It's on us for 30 days, and try it, play around with it, set up an exit plan. You'll love it. In the description of this YouTube video right here, you can sign up with Merlin 30 days for free, or in my bio. Try it before you